It's Sunday, June 26, 2022. Lots to talk about today. I want to start with this. I just got off the phone with a buddy of mine and he was just picking my brain. He goes, what do you think is going to happen to the markets tomorrow, this week? And in all honesty, I really don't know, because these markets are so engineered and so manipulated right now. In my opinion, they will probably go up this week because of the engineering, because of the Fed coming in and buying up these 10-year Treasury bonds and playing both ends of these markets. And this, as I've said, is extremely dangerous. I think when markets are this manipulated, this engineered, this means, at least to me, that we have very, very serious trouble on our hands. Why are they so manipulated? Why are they so engineered? They are trying to keep these markets alive as long as they can. And I truly do believe that the Fed is in a very, very bad place here with no way out. All they're doing now is buying time, but they're making the problem much worse at the same time. You cannot be raising rates and then buying bonds on the back end. Raising rates is having absolutely no effect on inflation while you're creating more inflation at the back end. All it is doing is hurting the middle class, the poor, the economy. And it's not, these rates going up are not doing what they're intended to do when you're buying up bonds at the back end and creating more inflation, expanding the Fed's balance sheet, and printing more money or producing more money out of thin air. It is going to have a catastrophic effect on this economy, and especially the middle class and the poor. And this is really going to lead us down a very, very dark road here. I spoke to my friend Mike yesterday. We were just texting. He's out in Alabama, and his buddy is a repo man. He's just a independent, I believe, just an independent contractor. Goes out with his truck, hooks cars. He said last week he repoed 19 cars, and I think that this really is a true reflection of this economy. We watch the television, we're told daily that the consumer is strong, that the economy is strong, but yet one repo man just repoed 19 cars last week. And people in the comments who know people in the business or who are in the business are saying that this business is booming. It's around the clock, 7 days a week. They're repoing cars like never before. And this to me doesn't mean we're in a very healthy economy when so many people are losing their cars to the repo man. We had a time where people were given a lot of money to stay at home, not do anything, not produce anything, and they went out and bought cars. And now here we are today, and people are losing jobs. They're losing their savings. They're losing their wages and paychecks to inflation. And we had way too many people never think that anything bad could happen, that we would never see the economy correct. Even though we saw the economy shut down for a whole year, I guess people just thought that things were going to be better than ever once it reopened. But really, when you think about it, the economy never really has reopened, at least not 100%. And all these people who went out and spent all this money when they should have been saving it and paying down debt, they went out and bought cars and toys and all kinds of things. And now the repo man is coming. The repo man is taking the cars. And these people aren't just going to lose their cars, they're going to lose their houses, they're going to be evicted. Here's an article I was reading last night on The Hedge. Prepare for a tidal wave of evictions. More than 8 million Americans are behind on rent payments, and the CDC's series of eviction moratoriums has long since expired. There's no help coming for these people. The government's safety net to keep these people off the streets is now gone. You are on your own. And I just, again, think about the mentality of people when they were given all this money to produce nothing, stay at home. They couldn't spend it fast enough. It's just, this is going to create such a problem socially and financially for this country. We have no idea what the fallout or the fragmentation is going to look like. And I think we're going to see a lot of this in 2023 really have significant effects on our country socially and financially. 8.4 million Americans, or about 15% of all renters, are at risk of being evicted. I mean, where are we living I mean, this doesn't even sound like a first world country any longer. 6.7 million households said that their rent increased on average $250 per month. And there are, no doubt, there are people out there that didn't blow their money, who did things right, who saved, and this is completely out of their control. And I feel sorry for those people. I really do. And I feel even more sorry for them when we're sending money to other countries. We're going to send another $450 million to Ukraine. And hey, look, I have nothing against Ukraine or Russia. I don't get political. But I say America first. And if people need food, if they need housing, do we really need all these people on the streets of America? No, we do not. Yet we're helping other countries, not helping our own. And that's it's just unbelievable to watch this take place. Another article on the hedge: U.S. rent costs surge to record highs as Americans expect inflation to get worse. What do you think? Comment down below. Is inflation going to get worse? Will it get better? I think it's going to get much worse. But I think that, again, things are so engineered and manipulated. We have to be very careful here how they're going to engineer these numbers. Median rents in the U.S. crossed the $2,000 mark this past month for the first time ever. I've said this and asked this many times before. How in the world are people doing it? I have no idea. This means the CPI is inaccurate and overall inflation is actually much higher than what is being reported. If you go to shadowstats.com, last I checked, they're reporting inflation to be around 17%. Many of you would say it's much higher than that. CPI print indicates an official inflation rate of 8.6%. Real inflation, as I just said, is closer to 17%. If you use the pre-1990s calculation that Shadow Stats uses. When people turn on the television and they see the television, the people on the television, their $3,000 suits telling them that inflation's only 8.6% and the economy is actually strong, the consumer is strong. This denial of reality is confusing people, and people they're really doubting themselves, and they don't know what to believe at this point. Well, I'm here to reinforce with all of you that inflation is not 8.6%. It's at least 17% and climbing. No matter how they engineer the numbers next time, and whatever the CPI is next time, whatever the GDP number is next time, remember, it's all engineered. Take a look out the window. Take a look at your local malls, your local retailers, the local restaurants. You know what is really happening. Yes, you may live in an area where the restaurants are busy, the stores are busy, but also we can also look at the amount of debt exploding in America. Credit card use, credit card debt, absolutely exploding. We have people that are in denial, that just cannot accept that we're in an economic downturn, that things are collapsing, and they're going to live for today. They're not going to downsize. They're not going to change their standard of living. Many of them think like, this will just get better in a couple months, so I'm going to continue to go out to eat. I'm going to go out and spend. I'll go out and buy a new car, and I'm going to use debt. And I'm going to get deeper into debt doing all this because they're in denial, ladies and gentlemen. So maybe you see restaurants that are busy. There are people, no doubt, that can afford to go out and eat dinner, without a doubt. But what's the percentage of those people that are using a credit card because they don't have the money to actually do it? How many people are going to the grocery store? Well, I go to the grocery store, I see people there all the time. But guess what? I see a lot more people using a credit card to buy their groceries. And they have a balance every month. They're not paying the balance off at the end of the month. And we know this because we're reading the data. And the data is probably even worse than what is being reported, to be honest with you. But you look at the amount of credit card debt just ballooning out of control, and people are going to get absolutely buried here at the worst possible time. If the economy was so good, you would not have so many people on the brink of being evicted, and so many people now dependent on the use of a credit card to survive. Another article today: stocks emerge from bear market as end of Fed rate hikes priced in with recession looming. Now, last week we saw a very, very nice rally, and now there's speculation that the July Fed rate hike will not be 75 basis points, it will be only 50 basis points. Also, there's speculation that September, the month of September, the Fed will reverse course, not raise rates, and bring back QE, which they haven't stopped. So I don't know. Is that another reason we saw the rally last week? Was it because the market is expecting a 50 basis point hike in July instead of 75? And will the Fed reverse course in September? Why the rally? Does the market know something that we don't? I don't know. I'm still under the belief that the Fed is going to continue to raise rates. I don't know about 50 basis points in July or 75. I don't really care. I do believe we will get another rate hike in July. I do believe we're going to get another rate hike in September. We shall see how it all plays out. But this market is looking for any type of good news. Those algorithms are looking for anything positive to get these markets to rally. These markets don't even matter at this point, ladies and gentlemen. Your economy has collapsed. And now, the things that we have to really be careful of is what's going to happen to the job market. We're going to see more layoffs. We're going to see more inflation, and we're going to see the real estate market really get beat up here very, very soon as we're continuing to see sales decrease. I was watching a show last night. I think it was Reventure Consulting, if I'm saying that right. Las Vegas real estate sales down 18%. And just give a whole list of cities where sales are just down double digits. And I think that we're going to see, no doubt, the worst real estate crash in U.S. history come to fruition very, very soon. That doesn't mean next week or next month. I think that we're beginning to see the air coming out of the bubble right now. Will that crash really begin this year or 2023? I don't know. I think that we're going to really begin to see things really begin to change in real estate this year. We're already seeing it. But when do we see something just go straight down? I think that can happen. I think it's very, very possible we begin to see certain areas in the U.S. plunge this year. Consumer sentiment hits record low. This on Fox Business. The University of Michigan's Consumer Sentiment Index released Friday shows the index plunged to 50 this month, a 14.4% drop from May, and the lowest reading since the survey began in the late 1970s. Small business pain points to recession. I would say expect to see more small businesses go out of business this year, and we're going to definitely see more layoffs across the country this year. It says interest rate increases are making consumer debt more expensive. Another reason consumer sentiment is at an all-time low, ladies and gentlemen, and another reason why small business in America is going to really feel the pain, because people just don't have the discretionary spending ability now with what is happening, and they're going to get squeezed much, much more. Look, this is the time right now, if you have to downsize, build up that cash reserve, build up a gold reserve. This is a time to, I think right now, not to speculate, but to get very, very defensive and get very, very protective of your wealth right now, because people have no idea how much wealth they're about to lose, especially the homeowners who bought a house the last couple years, last few years. The equity in these homes is going to be absolutely smoked. Another article from The Hedge. It's titled, Investors Clock Out of Rolex Bull Market as Demand Cools. The bull market in secondhand luxury watches is cooling down as collectors are cashing out. The Subdial 50 Index, an index tracking the top 50 most traded secondhand luxury watches on the pre-owned market, slumped nearly 15% since the peak in March and is down 6% in the past 30 days. Luxury watches have held their value over the last 12 months, still up 31.5%. And I bring this article up because I think it's another bellwether of what's happening in this economy, as we're beginning to see the crypto market come under extreme pressure, as we've seen a lot of pressure in stocks this year. This money now is not flowing into the luxury watch market. A lot of this market money, a lot of the crypto market was flowing into the watch market, and now it isn't. And that also means that we're not going to see as much of it flowing into Wall Street, luxury cars and luxury brands too. So again, this is just another bellwether that, people just aren't going to go out and spend things that they don't really need. And at some point, when you have 6 or 10 or 12 luxury watches, do you need any more? So we're really, I think, really watching a shift taking place in this economy. And I know tomorrow when I turn on the television, the cheerleaders are going to be out there, and I know they're going to try to rally these markets this week, and the Fed's going to buy billions of dollars of bonds in order to do it. But you know it, and I know it, that this economy is in shambles, and it has already collapsed. And we are now beginning to see the fallout. And it's not over. It's going to get much, much worse. So do you speculate or do you protect yourself right now? Me personally, I'm sitting back and I'm piling up cash, gold, and I'm sitting on the sidelines. You want to have some cash because when these markets do crash, and when we begin to see the real dip or the real dips in these markets, that's when I'm a buyer. I'm not a buyer in an overvalued market, whether that be housing or stocks. And the housing market is completely overvalued. Even though if we're down 20% in these markets right now, whatever it is, it's still very, very overvalued. When we begin to see 50%, now I'm getting interested. 60%, I'm really interested. But could they go 80, 90%? Absolutely, 100%. So again, another bellwether to what is happening in the economy. And another article on the hedge. If the streets of America are this chaotic now, what will they look like when things really start hitting the fan? I think that that's a question we all have to ask ourselves. I think that that's a question we all have to sit down with our families and discuss, that if things look this bad right now, what could this look like as we begin to see real food shortages, as we really see the supply chains really break down? What could this really look like on the streets of America? And are you prepared for that? Too many people just believe that having an alarm system and a cell phone protects them. They do not live in the real world. Safety and security is the ultimate asset, ladies and gentlemen. You must have security. I stress this daily. I'm going to continue to stress it daily. And security is not a cell phone. It is not an alarm system. That's great to have. It's great to have all that stuff. Put all the odds in your favor. Have it all. But you must have the tools and the training in order to really have security. Nobody is going to save you but you. And I want to close with this. Everything we're watching, and the markets going to open up here in a little bit, and we'll see what the markets open up this evening. But tomorrow will be very, very interesting. But we have been no doubt living in an illusion of prosperity created by massive amounts of money printing that the Fed created, and it's driven asset prices to the moon with fake purchasing power. And this all needs to come to an end. And people think like, oh, do I get happy when the market crashes? Am I going to be happy when the housing market crashes? No, because I know that there's going to be a lot of pain out there and a lot of suffering, and people are going to lose everything. But I don't believe in endorsing fake markets with fake money, because see, we're all paying for this. You and I are all paying for this illusion of prosperity. We're paying for the QE. We're paying for the money printing so that a few people make some money on Wall Street. Wonderful. Maybe you have some friends that are doing well. But why should I support this illusion, this criminality that is taking place that is really bankrupting the entire economy? We're sacrificing the U.S. economy for the stock market. I think it's not right. I think it's criminal. I think it's evil. And I think, I just can't believe in anything that is fake. Okay, it's all propped up by the Fed. So how can I support that? I want it to come crashing down. It needs to come crashing down. Why should asset prices be this overvalued based on an illusion? I want a free market. I want a real market where asset prices are based on what they're worth. not on how much they've been propped up with corporate buybacks or by the Fed with all this illusionary money. So I truly do believe it has to come to an end. And you know, it's almost like having to put an animal out of its misery. Okay, nobody wants to do it. It's, you know, it's a terrible thing, but we cannot continue to allow this country to suffer by the hands of this greedy stock market, again, which has been propped up, manipulated with a bunch of magic tricks and a bunch of money printing, because it is absolutely destroying the US economy, your purchasing power, my purchasing power. And now we're all going to pay a price. I don't care who you are. We are all going to pay a price when this thing comes crashing down, because they built a 3-story house of cards on top of quicksand. And they've been fooling people for years that this was all real and that it was never going to come crashing down. And now that we move the interest rates a little bit, you can see how fake these markets are. They're very, very fragile because they're fake. They're going to make you believe that inflation, I want to say this, they're going to make you believe that inflation's not going up, that it's coming down. And just as these markets are manipulated, the CPI is manipulated. And if people really knew that inflation today, as I make this video, was 17%, I think a lot of people would actually be freaking out. But it is 17%, more than 17%, but they're telling us it's 8.6%. So people are able to digest it and they're able to deal with it because they're just told it's 8.6%. But think about it, when you go to the gas station, when you go to a restaurant, when you go grocery store shopping, when you go to any type of store, look at the price. Is it really up only 8.6%? Are you paying only 8.6% more this year than you were last year for steak, chicken, poultry, a gallon of gasoline? Think about it. I mean, if you're in the construction business, you know, it's roofing material, appliances, nails, lumber. Is it only up 8.6%, or is it up a lot more than that? I think people would be very, very angry if they really knew what was going on, but they're too busy running up their credit cards, going to restaurants, buying cars, and now beginning to panic with some of the decisions they've made. They're going to be so scared and so stressed out now that they can't even think about what is really going on. If they knew what was going on, I don't think they'd be able to sleep at night. And there's a lot of people right now not sleeping at night. If they really knew how bad it was, they wouldn't sleep at all. I mean, that's the thing. Think about it. If people really knew what was going on and how bad and how weak this economy is right now today, they'd be in panic mode. And that's what they're trying to do right now. They're going to try to cool all this down, you know, try to bring the GDP up for the second quarter. They're going to try to get the CPI number to come down and cool everything off and reassure you that the Fed is fixing the problem. There's nothing the Fed can do now. It is, I think, completely out of their hands. This is going to play out the way it's going to play out. They can't control the supply side. They can't control food. They can't control the energy problem. They have absolutely no control now with how this plays out. They can put rates up. They can put rates down. But one thing, one way or another, there's going to be extreme pain to be felt. It's either going to be more inflation or rising rates and a tightening of the balance sheet. They're going to crush the economy. This is unavoidable. If you have inflation beginning to run into hyperinflation, kiss the economy goodbye. If you begin to raise rates aggressively and you tighten the balance sheet instead of expanding it and printing more money like they're doing, buying bonds, it's going to have a negative impact on the economy. So either way, this problem is not going away, ladies and gentlemen. Inflation is here to stay, and people are going to lose their standard of living. Many, many people are going to lose their standard of living. And this is why I say prepare, put cash away, put some gold away, have all your emergency gear put away, food, water, etc., so that you can hang on to your standard of living the best that you can, or at least hang on and weather this storm. I think right now, if you're thinking about downsizing, this is probably the time to do it. This is the time right now to really get defensive, not speculate, but get defensive. All you have to do is look at the global debt right now. Global debt is exceeding $300 trillion. Household, corporate, and government debt all over the world exploding, especially right here. We are the biggest debtor nation on planet Earth. And I think right here, we are going to feel the pain, maybe more than anybody, because of what we've done. It's going to be a difficult time. I'm going to leave it at that. We are heading into a very, very difficult time. And anybody that thinks that this is unavoidable, you are 110% wrong. We are on a collision course to a depression. We are on a collision course to a depression. And again, the Fed has backed themselves into a corner. I know that they've got tricks and they've got tools and they can do all kinds of things. At the end of the day, it really comes down to mathematics. It comes down to debt. It comes down to employment. And it comes down to a currency that is depreciating and losing its purchasing power every day. It comes down to a shortage of oil and gasoline, a shortage of food. This thing is breaking apart at every angle possible. And there is just no way the Fed is going to be able to fix all of this. They can hold it off for a little while. That's it. They can hold it off for a little while longer, but by doing it, they're just going to make it worse. So, difficult times, ladies and gentlemen. I'm going to leave it there. God bless all of you. Thanks for watching. Take this weekend and prepare.